Fortune favors the bold, right? Well, when it comes to investing, that might not always be the best advice. While betting on just a few stocks could bring big gains, there is also a high chance of losing everything. In today's market, adopting a diversified portfolio strategy can be a more prudent approach, allowing you to mitigate risks while maximizing potential returns. The stock market is more top-heavy than ever. As of July, the top 10 holdings in the S&P 500 made up 34% of the index. That's higher than 99% of all months since 2002. So, how can you protect your portfolio from being too concentrated? Let's take a look at 3 ETFs that offer broad diversification. First up is Schwab's Fundamental US Large Company ETF, ticker symbol FNDX. It takes a unique approach. Rather than weighting stocks by market cap, it weights them by fundamental size. This approach focuses on increasing investments in undervalued stocks while reducing exposure to those that are overhyped. With a portfolio of large and mid-cap US stocks, it holds big names like Apple, Microsoft, and Amazon, but in smaller proportions.
You got us very high up in 3 major companies.
This equilibrium enables it to flourish during market fluctuations.
A strategic equilibrium.
In the past 10 years, it has achieved an annual growth rate of 11%, outperforming 95% of its competitors within the large value sector. Next, we move to the bond market with the JP Morgan Core Plus Bond ETF, ticker JCPB. Launched in 2019, this actively managed fund mimics the successful JP Morgan Core Plus Bond Mutual Fund. With over 2,300 bonds in its portfolio, including securitized debt, treasuries, and high-yield corporate bonds.
Those bonds are often very strong.
This ETF provides broad exposure and a robust strategy. The low fees and experienced management team make JCPB a strong choice for bond investors. And finally, we have one of the biggest players in the ETF world, the Vanguard Total Stock Market ETF, ticker symbol VTI. VTI doesn't try to pick winners, it buys the entire US stock market.
We got everything you need here, all right?
From small caps to large caps, VTI gives you everything for a rock-bottom fee of 0.03%. Since its inception in 2001, it's delivered an annualized return of 8.9%, beating the S&P 590% of its peers. Whether you're looking to diversify your stock holdings or add bonds to your portfolio, these 3 ETFs, FNDX, JCPB, and VTI, offer broad, well-balanced options. In the long run, playing it smart with diversification can bring you steady returns and protect you from market volatility. Thanks for watching, and don't forget to subscribe for more investing tips.